So just a bit about Bacanora, dual listed AIM and TSXV. We have been drilling on the project for the last 5 years, delineating a lithium carbonate resource, and we have over 7.5 million tons of contained lithium carbonate in the ground. What we are doing now is going through a series of studies. We did a PEA, we did a PFS, we're now doing a bankable study for a project that will produce 35,000 tons a year of lithium carbonate, battery-grade lithium carbonate for the battery market. At 35,000 tons a year, over 7 million tons of contained carbonate, that's a 200-year resource plus. What we've done through all the stages is try to demonstrate that we are an economic project. If you look at the recent studies on lithium carbonate operating costs, anything from $2,500 per ton of carbonate up to $6,000 per ton of carbonate. The brines in South America producing for between $2,500 and $3,000, the hard rocks in Australia and China producing for $5,000 to $6,000. We want to be cost competitive with the brines out of South America. Operating in Mexico, we want to produce lithium carbonate at the same cost or slightly more expensive than those brines. We want to be a long-term, low-cost Q1, Q2 producer. We've got money in the bank, we've got 25 million Canadian, we're fully funded through all of our study phases and for the first stages of construction. And we have a good team in Mexico. We've got over 50 people down there. We've got a management team who between them have about 100 years of lithium experience. We're training a local workforce. We have about 40 operators and we have about 10 management. So a large team operating a pilot plant that's been producing lithium carbonate now for the last 9 months. So lots of stories about lithium batteries and what's happening, but basically if you want to store energy and you want to make it portable, then you need to put it in a lithium battery. So everybody has one of these. If this were to have a lead acid battery in it, it would weigh about 1 kilo. So a lithium battery is a light, energy efficient means of storing energy. So this would weigh 1 kilo if you put a lead acid in it. If you have a laptop and you put a lead acid in it, it would probably weigh about 20 kilos. So the thing about lithium is if you want a portable battery, you have to use a lithium carbonate battery, or a lithium hydroxide, or a lithium sulfur, or a lithium cobalt, or a lithium iron, but it has to be lithium. So if you want a portable battery, whether it's in a car, whether it's in portable electronics, it's a lithium battery. This just talks about what's happening to the market, but the growth in the lithium battery industry is significant. Demand is growing at 10% year on year. The value of the industry, currently about $15 billion, going to about $60 billion over the next 10, 15 years. So lithium battery energy storage is the way of storing energy for at least the next 3 or 4 battery generations, which is probably 30 to 50 years. So we talked about lithium and where it goes, but if you put lithium in a cell phone, then there's about 3 grams of lithium carbonate in a cell phone, and probably 1 billion phones sold every year. Go into a laptop, about 30 grams, about 1 ounce. Once you start talking about electric vehicles, whether they're hybrids, plug-ins, or full electric, anything from 5 kilos to 50 kilos, depending on the size of the motor and how far you want it to travel. And then the really sexy thing is grid storage, renewable energy storage, energy that's coming from solar or wind going into large batteries as big as this room. And for every megawatt hour of energy storage, you need about half a ton of lithium carbonate. So you can see as demand is moving from cell phones to hybrids to electrics to grid storage, the amount of lithium being consumed by the industry is growing significantly. At the same time, the cost of producing a battery is reducing. So if you look at the cost of producing a lithium battery maybe 10 years ago, it was about $2,000 to $3,000 per kilowatt hour. Currently, depending on who you believe, it's around $150 per kilowatt hour. And the holy grail is $100 per kilowatt hour. At $100 a kilowatt hour, then a lithium battery is cost competitive with a lead acid battery in a vehicle. So 20 to 2025, you're going to start to see substitution of lead acid batteries in vehicles for lithium batteries. So what's happened to pricing? This is what happened to lithium pricing at the end of last year. So it's been nice and steady rise for 20 years. All of a sudden, at the end of last year, there was a supply shortage. There was large demand coming out of China. And prices, these are spot prices, not term prices, but spot prices went from about $6,000 a ton to somewhere around $20,000 a ton. It's come down since then. And if you look at Orocobri's quarterly report last quarter, they're now selling lithium carbonate for around $9,000 a ton. So current spot prices around $9,000, term prices slightly below that. But what you're seeing is a shortage of supply and a corresponding increase in pricing. And the reason for that is this. Demand for lithium products growing at about 10% year on year. It's about the only commodity I know that has continued to grow since 2008 at about 10% a year. So current demand, about 160, 170,000 tons a year. And if you believe that graph, by 2025, world demand is going to be about 400,000 tons. So demand is going to double and a bit in the next 10 years. Where does it go? It mainly goes there. Energy storage in one form or another. So this is batteries. A bit into ceramics, a bit into greases, a bit into medicine, but this is the fastest growing segment. If you had looked at that segment 10 years ago, it would have been about that size. It's doubled in 10 years. It will probably double again in the next 10 years from that chart there. And if you look at the producers, there are only 4 major producers. The big one is SQM out of Chile, producing from a brine. The other one in Chile is Rockwood Albemarle, again producing from a brine. FMC in Argentina, and you've got Tianqi Rockwood in Australia. So between those 4 companies, they produce about 85% of the world's lithium carbonate. We want to change that. We want to be the next one in 2020. And where are we? We're in Mexico. So we're in northern Mexico, Sonora state. Capital is Hermosillo. Our project is about a 2-hour drive from Hermosillo. Good access. It's an all-weather road. We have electric power just north of site. We have water on site. We have a local workforce about 10 kilometers away, a town of about 2,000 people. So infrastructure is good, and access to a port is good. Port of Guaymas is about a 3-hour drive from the project. That's a bulk port. It's a container port, so we can export lithium carbonate to Asia from Guaymas. The project site itself, pretty picture there. It is a valley that stretches for about 7 kilometers, and the seams of lithium run down the valley northeast, southwest. When you look at that in plan, that's the 7-kilometer strike. This little red area here is the first 20 years of production. The green area is 50 years of production, and the whole lease is the 200-year resource. So it's a large resource. It's very scalable. We've only drilled that part there. So obviously there's a lot more exploration potential as we keep moving forward. We don't just have one seam of lithium. We have 2 seams of lithium. We have an upper clay and a lower clay. The upper clay is about 30 meters thick. The lower clay is about 25 meters thick. And both of these clays expose themselves on surface. So this is an open pit mine, low stripping ratio. And what it is a higher grade lower clay and a lower grade upper clay. So for the first 20 years, we mine about 75% of the lower clay, stockpile the upper clay, and then put the upper clay back at the end of the 15 years. Just the resource numbers. What's it say? 400 million tons, 3.32% Li, 7 million tons to contain lithium carbonate. We've just finished the drilling program. We finished the drilling program in September. SRK are now doing a resource update. So what we're doing for the bankable study is part of this indicated resource. We're converted into a measured category, and that category is used for reserves for the bankable study. What we did 3 years ago was actually try and demonstrate that we can produce lithium carbonate in Mexico, that we can produce it from this deposit, and we can produce material that is battery grade and suitable for off-takers in Asia. So that's a fairly large-scale plant. It's one of the larger pilot plants you'll see in the lithium industry. It's now been operating for 3 years. It's been operating continuously for the last 6 months, and we've been sending samples out to Asian off-takers to demonstrate that we can produce battery-grade quality. Those tests are ongoing. We're talking to a number of off-takers in China, Korea, and Japan, and we hope to bring those to fruition first quarter next year. On top of demonstrating that we can produce carbonate, it's also a great training program for local people. We talked about Africa before and the benefits of having local employees. It is a significant benefit to Mexico to have a lithium industry in Sonora. So we have been training 45 employees for the last 6 months, and that employment and that training will continue for the next 2 years as we go through the construction phase. So by the time we finish building the main plant, the big plant, the 35,000-ton plant, we will have a core team of 50 people who've been operating a lithium plant for over 2 years. The process itself is what they call conventional sulfate route. So it's an open pit mine, truck, shovel. We're looking at 300-ton trucks. We're looking at one 200-ton excavator. Goes to a stockpile, and from a stockpile it's fed into a trommel. A trommel is just a big drum that sizes material. So we're looking to reject oversize. Anything bigger than 6 millimeter has very little lithium, so we just throw it away. The undersize, the -6 mil, goes into an agglomerator, and we basically mix that fine material with gypsum. And gypsum is calcium sulfate, and we're looking to bind the SO4 to the lithium, to the Li, to make lithium sulfate. And lithium sulfate is the building block for lithium carbonate. So we mix it with the gypsum, we roast it at about 900 degrees for half an hour, make a lithium sulfate, and then we leach it with soda ash, which is sodium carbonate, and the CO3 from the carbonate adds to the Li to make Li2CO3. So sulfate route process, you can mine this on a Friday, you can produce lithium carbonate on a Wednesday. It's a 5-day process. Different to the brines in South America, you can pump a brine in 2016, and you might produce carbonate in 2018, 2019. So the process route is different. What we want to demonstrate is that we can make this material in Mexico, in the pilot plant, to a grade that's acceptable to off-takers, and that we can be cost competitive with the South American brines. So the South American brines. SQM, biggest producer. Albemarle, second biggest producer. Those guys both in Chile, producing for somewhere around $2,500 to $3,000 a ton of lithium carbonate. These guys, these are the hard rock guys in Australia. In Australia, they produce a concentrate, and that concentrate gets put on a boat and sent up to China, and the Chinese then convert the hard rock concentrates into lithium carbonate. And you can see their cost curve somewhere between $5,000 and $6,000 a ton. We need to be sitting in here. We need to be cost competitive with the South American brines, and our pre-feasibility study says that we can do that, and we can be cost competitive. Feasibility study has been ongoing since March. So basically in March last year, we produced a pre-feasibility study, a plus or minus 25% study. We moved straight into a bankable study, which is a plus or minus 15% study, and that'll be finished at the end of Q1 2017, so March, April 2017. We have money in the bank, so we're fully funded. All of the work is being done by external consultants. So Ausenco engineers out of Perth, Australia are doing all the process work. SRK out of UK are doing the resources. IMC out of Tucson are doing the mining. And SGS Lakefield are doing all the metallurgy work, both in Canada and Australia. So everything that we've done has been done by reputable international consultants who are very bankable. Pilot plant, operating continuously, has been since May this year, producing samples for off-takers in Asia, and that will continue, as I said, for the next 18 months, both to produce samples and also for a training purpose. Ongoing recruitment. We currently have 25, call it process staff. We have another 15 technical staff, so 40. We have to increase that to 250 people by the end of 2018. So that recruitment process is ongoing over the next 2 years. And our timetable is, drilling is completed, pilot plant is operating, samples have gone to off-takers, BFS or bankable study will be finished at the end of Q1. Funding. So what we need to do is we need to raise the required funds for the project. At the moment, the capital cost is somewhere around $250 million US dollars, and working capital another $50 million on top of that. So we need to raise $300 million in Q2 next year, and that will be a combination of debt, equity, and off-take finance from the off-taker. So we need to tie up an off-taker in Q1, get the banks involved, get the equity markets involved, and basically go out and raise $300 million in Q2 2017. And then it's 18 months. Construction time to produce a first-scale plant, first scale is 17,500 tons a year, is about 18 months to build it. So that takes us from July 2017 through till December 2018. So we want to complete building in December 2018, and then it's about a year to ramp up to full production. So by the end of 2019, we want to be producing at an annualized rate of 17,500 tons a year, basically selling into the market in Q2 of 2019. So a third of the way through the ramp up. Shareholders. REM, 19%. Igneous Capital and DNA Income, both related to Grave Edwards, about 14%. Cullen or Ewing, that's the family trust, that's just dropped to about 8%. You've got M&G at just over 7.5%, and you've got BlackRock now just over 10%. So the top 6 control about 55% of the company, and the rest is mainly UK retail with a bit of Canadian retail on top of that. $25 million Canadian in the bank, about 110 million shares on issue, and a share price of about 75 pence. So market capitalization of about 80 million pounds. Oh no, we can't update that. We have a good team. If you look at the management team in Mexico, and they are all in Mexico, 4 American lithium experts, mainly from FMC, have about 120 years of lithium experience between them. They've built hard rock mines, they've built brine operations, and now doing a clay in Mexico. Those are the key people for this. They are doing the training of the operators, they're running the pilot plant, and they're also completing the bankable feasibility. All of our management is in Mexico or in North America. So basically, the focus of the company for the next 3 years is to finish the study, is to raise the required funds, and then go ahead and build the project, and then build what we believe is going to be the 3rd largest lithium producer in the world by 2021. And that's the story.
Any questions, anybody?
Excellent. Oh.
Sure. In terms of the revenue that might come from the pilot plant, how much do you think?
No.
Is it not large enough to be cost effective?
No, this is really just to demonstrate that A, we can produce it from the clays, and B, to send samples to off-takers. And you don't make friends by trying to sell samples to off-takers, so this is all a demonstration plant.
Could you tell me what percentage of world production comes from brine and what percent comes from hard rock and what percent, if any, comes from recycling?
Recycling is probably 0.01%, so it's pretty small. If you look at say a Nissan Leaf battery, costs about $8,000. The lithium content is probably $100. So you don't recycle for the lithium, you would recycle for many other things, but not lithium. But in terms of brines, there's your blue scale. So out of 100 and let's call it 70,000 tons, about 100,000 tons is from brine production.
So when you start producing, it's hard rock will be bigger than brine.
Well, we're what they call a clay, so we're a soft rock. So we're sort of in the middle. So yes, we'll be sitting in there.
Last question: Can you produce lithium from any brine, or is it got to be a sort of a?
It's got to be a lithium brine. so that's a facetious comment. You can produce lithium from a lot of. If you eat broccoli, for instance, broccoli is really high in lithium. Salt water is high in lithium. But if you want an economic source of lithium, so something that produces a battery grade at a cost of $3,000 to $4,000 a ton, then the main occurrences are in Chile and Argentina, with a tiny little bit in China.
Can you say something about your relationship with REM?
Well, Kieran is on our board, and Kieran is both a geologist and a financier, so Kieran is great. In terms of, and obviously they're a shareholder, but in terms of the project, this is the 20-year pit. So the pre-feasibility was based on the first 20 years of production. And in terms of this, we own 100% of what's called the Ventana deposit. And Ventana has about 84% of production from the first 20 years. So for the first 20 years, 84% is Bacanora. This 16% is in joint venture land. So joint venture land is 30% REM and 70% Bacanora. So out of this bit, REM will get 30% of 15%, which is 5%. So over 20 years, REM production is about 5 to 6%, and their production starts around year 5 or 6.
Did they not try to take you over? Was that something?
They did. They made an offer, and we politely declined. We didn't believe it was in the best interest of shareholders.
You mentioned 2020 as when you'd be in full production.
Correct.
But you're raising cash Q2 2017,
Correct.
$300 million.
Yes.
Is that going to be enough to take you all the way through to full production?
Correct. So that's all of the capital required and working capital to get us through to full production.
At what point on that time do you start becoming cash positive, would you say? Right at the end, or?
Cash positive. So we get to, let's say, break even at 50% of production. So if we finish the plants in end of 2018, if we start producing in 2019, about halfway through 2019, we should be breaking even once we get to 50% production.
Would you aim to pay a dividend at that point?
No, the banks will take the money first because for some reason banks want to get paid before shareholders. So I don't understand that. But so as soon as we pay off the majority of the debt, then we can start paying a dividend after that.
Next question.
Is all your output destined for the Asian markets, or have you got the US in your sights, for example, the ambitious Tesla Corporation?
So in terms of lithium carbonate, and that's our focus. I would say about 95% of lithium carbonate consumption is in China, Korea, and Japan. So all of our market focus has been on China, Korea, and Japan, and will continue to be so.